Let's get this party started. Sorry I'm late. But feel fortunate. It's only a few minutes. Yeah, technically 5 minutes. Sorry. I am later than what is acceptable for me. All right. Welcome back to the Cosas Verdes show. We're going to do live coverage of Bitcoin price, Ethereum price, XRP, and Dogecoin first. And then I'll move on to the live questions. Heads up for anybody new on here. I typically only answer two types of questions that I see. The first and most usual is the ones with the emblems, because those are my YouTube tier community members, and that's one of their main, benefits of being part of the YouTube paid for community. And then super chats, and then rarely, I think it's been 2 weeks since I've answered one of these, but just a typical question that's a really good one. I am scanning them, and I do miss some good questions, I assume, but if I skip over your questions, there is a reason, and I'm not doing it just to be rude, but rather it's more methodical. So just a heads up there. And if you wanted to check out what that's like, the on my non-live videos, so just any of my typical videos, there's a join button right next to the subscribe button, and a video will pop up with skeletons and pirates explaining what it offers, and it's only about 90 seconds long. So if you click join button, it won't just confiscate your money right away. Okay, it'll tell you what you're getting into before you get into it. All right, so that is my spiel on how questions work here. And price of Bitcoin is still going sideways, but something integral, or a couple, let's see here. The price of Bitcoin price is still boring and going sideways, but there are three key potentially macro or mid-macro items that have triggered this week, even in light of Bitcoin price almost doing nothing. And I don't think that you're going to see another channel show you the significance of that despite sideways price action and the potential ramifications that it could have for crypto/Bitcoin price. And I'll give you a hint. Two are bearish. One is exceptionally bullish. And you aren't going to see any other video or channel out there covering these three together, particular to boring sideways action. So what triggers could this be? That's what we're going to cover on the Bitcoin portion of this live stream. So let's go get some friggin' Bitcoin. Should we start off with the bullish one? No, let's save the bullish one for last. And it is pretty, that is something that you will not find anywhere else, because it's going to be using a chart that I created. It's not very difficult to create. You can copy it if you wish, but you will not find it anywhere else. Sideways price action, zooming out on the daily here, simply to get a scope. Let me go to a cleaner chart, and let me set the context for what I'm about to say. Bitcoin has been in about 140 days consolidation. So this is the macro outlook. Where are we right now? Have you ever gone to a state park or just somewhere where it has map for it, and you walk up to it and it's an outside map and it says you are here with a star? Okay, that's what we're doing right now. We are here compared to the 69K top. This is a move of momentum. Mostly, this is a bullish, very volatile consolidation. And you can see that the most volatile consolidation period is the first one after the top, for darn good reason. Because people were still believing, hey, this is a macro higher low to this macro higher low, and the week was still in an uptrend. Like, this was the line in the sand for the week. And that's why this dumped so hard, because the week, I think, finally succumbed to being in a downtrend at that time. I think that's where it happened. But regardless, this was a volatile consolidation period. Then the next one became extremely, just very flat. This was even less volatile and more boring. But it was actually wicked difficult to trade there. If you zoom into the 1 hour candles, it was wild. The first half of this, for me, I traded it very, very well. But since about that point, like, I got to the point where, like, you know what? It's better to trade altcoins, because you're just competing against highly sophisticated bots that are whipping around Bitcoin price because no one else is trading it from a percentage, all things relative. The vast majority of all trading volume, not transaction volume, trading volume is highly sophisticated and likely high volume, high frequency trading algos. So we are in, after, let's say, 3 main consolidation periods. First one was aggressive. The second one was smaller and less aggressive. And this one is going sideways. And we're 140 days into it. So what are some triggers that have happened? First off, I'm going to use SPX to show you this. In a couple of ways. The first trigger is technically outside of Bitcoin. Bitcoin has been following SPX to an extremely strong correlation, positive correlation, right? So one trigger that has recently happened is in the trend that after a rally, you make lower lows. After a rally, you make lower lows. After a rally, you make lower lows. This wasn't a very big rally, but what happened? Here was the previous low, made new lows. Rally, the recent trigger here happened on the previous day, so just yesterday, on that very bearish candle during FOMC, where big money / smart money market makers, the big bad days, right? However we want to label these people with a lot of money, probably hedge funds, right? But they gave up the hopes that in U.S. monetary policy, that Jerome Powell, the Fed chair, would pivot. Therefore, the party's back on, and we could party to the upside, which the stock market has been almost purely up over the last 12 years. It's a drug. People are going through withdrawal symptoms. So this whole time since, was it January? I don't know what this is, but people biting their nails, withdrawal symptoms, right? So since January, the market cycle top, people have still, instead of like just accepting, I'm never going to be able to have nicotine again, or whatever, pick your vice. That's addictive, pharmacologically and molecularly. People have been sitting there not accepting that they're never going to do it again. They're hoping, okay, I'm going to get a cigarette like now, right? And now is the time where they just gave up that hope. Very significant, clear point. It's outside of Bitcoin, but it is a trigger for Bitcoin because Bitcoin has been trading with this chart to an extremely strong degree. Does that make sense? That's the first thing that's very bearish, okay? The third thing I'm going to cover is very bullish. All right, so that is a macro bearish type of deal. And if you mix that with the fact that, so I did the context first on purpose. If you mix that with the fact that this 140-day consolidation is, I think, the longest one of all the consolidations of this bear market. Yeah, it's the longest consolidation period of the whole bear market. That means it's mature. It's got to go somewhere. It's going to pick a direction, right? And it's going to move. And we just had that trigger happen. What do you think? It's a big trigger because it's got to go somewhere. Like now, right? Maybe not today or tomorrow, but November, December, it's got to go somewhere, and it will. That's trigger number one. Trigger number two is not so macro. Trigger number two is something I've been discussing since Monday or even last week. I can't remember what day it was, but we have a, I guess, a pivot point, which could end up stimulating or being the very beginning of a macro or mid-macro pivot. which in this case, because this has been going sideways, it means not go sideways. It breaks out. And so to be more, I guess, to take a microscope, so we're taking a magnifying glass to the first trigger that I showed you, right? This is technically a different one, but in reality, we're just trying to pick a very finite point on when does this all begin? Like, when is the beginning of it happening, right? Of this next move down. We definitely, we will not know until it becomes hindsight bias, which means we won't really know until after Bitcoin really moves, right? Then you'll look back and say, okay, this is where we could have known, and this is where the move actually began. And in hindsight, it started here. So therefore, I can now apply this to the future and make this as a guess. All right. But anyway, so this point right here is the magic line in the sand based off weekly candles. I'm not going to go back over it. You can go to my previous Bitcoin videos from the same week. Not during live shows, just the standalone recorded videos about how I set up these lines and why they're so important and why I felt that if Bitcoin went below this bottom line, even for a 1 minute candle wick, I'm kind of exaggerating, maybe accept that, but even for a 1 minute candle wick, which is what I've been saying, if it happens on not Wednesday during FOMC, which FOMC bounced off this, right? So if it happens after FOMC, then the direction for this week is going to be red, right? And if it is red, this could be, this is the teeter-totter point where a pullback could evolve into a reversal. Therefore, new lows are getting ready to happen. Or the current lows at 18.2 around the bottom of this triangle back over here, the 100 that most people are, have been staring at. Either or. A reversal where this is broken or at least hit again down here. And this is kind of my line in the sand for that. Before I had my lines here, I want to clear up confusion that I very easily could have caused. Because I forgot to explain one thing. Before I had these lines here, it was it was last week. So I hadn't talked about these lines yet, but Bitcoin was up here. I said around this time, throughout the next week or so, Bitcoin can easily come all the way down to 19.2 to this breakout, and on the daily scale, be in an uptrend. So it could come all the way back down here, and it would be the trend of the daily would still be good because it's above this point here. As long as it stays above technically 1900, it is in an uptrend. And that is bullish. In addition to that, that pullback would be extra healthy because at the time it would have been coming down to test the top of the triangle, which technically it still would be. So it'd be killing two birds with one stone. A deep pullback that helps reset a bunch of indicators so that the next push up can get above this high, and then it would go to my next origin line. Then the target would very, very, very clearly be, this top origin line. Because it aligns with so much stuff from horizontals back here and all that stuff, right? I said that the week before. So is that still the case? It technically, all that is still accurate. However, when you are, how a teacher, back when you were in school, if you're still in school, on a test, let's say there are 10 problems, the first 4 are multiple choice, and then the next 6 are word problems, but the last of them, the 10th question, is like the one that's going to take you 30 minutes, and the rest of the test only takes this, right? And so it has more value to it. It's weighted heavier. Okay, like the problems are weighted, right? So it's a 100 point test. Each multiple choice is only worth 2. The word problems are worth 10 apiece, and the last one's worth 30, for example, right? Does that make sense? So with that same thought process, yes, it's still accurate that is still in play, a pullback down to here, but because of recent development and the development of the importance of these lines, I'm giving a less weight to that. At the beginning of this move, it was the idea that a pullback down to 19.2, it would still be bullish. The weight of that was very heavy, actually. Like, even if it came down, it was very probable. So the probabilities were still good that would create. I mean, you would not be on lower high watch. If it bounced from there, you would fully be expecting at that time, from a probabilistic standpoint, that it would go past these highs. If you got a reaction, if it did come down here and got a reaction. But now, throughout this week, these two very important lines have formed, and I've covered why, so I'm not going to, because it would take a while to explain. You have to watch my previous videos. This line has developed, it's closed below, therefore this is now weighted differently. And that is confusion I could have created with saying two contrarian things within about a 10-day period or so. Okay, now the thing that is honestly exceptionally bullish, and you know, I have been kind of like a bear market person since an appropriate time to be bearish, but since before the common population was accepting it's in a bear market and their money is not going to go, you know, that Cardano's not going to $12 and shit like that. It was way before then. I was getting made fun of and all that stuff for being bearish. But so I've been bearish fairly early, right? Fairly early. I wasn't the earliest, but I was early enough to be made fun of. Like saying, you know, if you're interested in Solana, don't buy it till it's $30 back when it was like $150, right? And I made a video on that and all that. All right. And if you haven't watched that, go to my channel and type in just perfect. Just type in the word perfect, searching among my videos only, and it's the one that says Solana. Perfect Solana prediction or whatever. You watch that if you're new. It's 90 seconds long or something. All right. However, so with that, I've been early bear. I've been very loud about it and mostly right about it because it's obvious, like cross bad, right? I even made videos with music and all that shit. So even with that, I am going to say that the probabilities that the bottom is in, that probability is getting a lot better, and it's getting better quickly, very quickly. It has not gotten to past 50% likely yet, so it's not probable. That's the key word. It is not better than a coin flip yet. However, in my opinion, the chance that the bottom being in, you know, let's say a month and a half ago was 10%, maybe 15. 3 weeks ago, I came on and said, man, this happened. I think it might be 20%. At this point, it might be closer to 30. All right. And so I'm getting ready to show you something that you will not see anywhere else because I made the chart, but it's clear as day. So let's go get it. Sorry for the backstory, but hopefully, you know, you see that as somebody who's been a loud bear, I'm still saying this. Like, this is legit stuff. All right. This is also a 140-day consolidation period, but we don't know what we're looking at outside of something that is influenced off the price of Bitcoin movement, because it's also consolidating the same time frame, right? And it kind of looks similar. This is Bitcoin versus SPX, or no, actually, US 500 so it's the S&P 500 futures, and I use that because there are more candles. It's traded more hours, right? So there's more data. Fun fact: Bitcoin has literally been traded longer than the entire history of the S&P 500. Not longer than the S&P 500 futures, you know, but there have been more 1 hour candles on Bitcoin than there has been in the entire history of the S&P 500. And when I heard somebody say that, I actually Googled it. I was like, and it was right. I didn't believe that statement. I was like, this person's full of shit. There's no way. But all the times it closes and Bitcoin doesn't in 13 years, it's true. All right. Anyway, so I used it versus the US 500, which is the futures chart. And in the way I developed this chart is I made it slightly exaggerate itself So if you are somebody who's edited a something on Photoshop or whatever, just any platform where there's color, it's similar to increasing the contrast or the saturation on the picture. So this chart increases the saturation level or the contrast. Yeah, it exaggerates it, just like that. All right, so what we're looking at here is Bitcoin was in a 60-day uptrend, very aggressively so, and it came in form of Bitcoin price going sideways as the stock market went down. So Bitcoin actually didn't go up really during this time. This was Bitcoin holding strong sideways as stocks went down. And this chart went up because of that, because Bitcoin was strongly outperforming the stock market, which was making new low after new low after new low since June, right? So get an idea of this. So that consolidation period started about here. Now, roughly when I think Bitcoin hit 17.5 at about this point. So since this point, that uptrend, 60-day uptrend happened here. Bitcoin created no new lows and did not go down this aggressively at all for that 60-day time frame. It essentially stayed flat. And that's why the chart went up. Okay, so that's what we're staring at. Now, why is this bullish? There is going to be a threshold on this chart that in the end is the exact horizontal. It's probably going to be a horizontal. It might be something like the weekly 21 or something, but I think it's going to be horizontal. You won't know it until hindsight bias, until it's already said and over, then you look back to the data. You won't know, but you can make guesses that there will be a horizontal on this chart that indicates this is when Bitcoin is going to go up, even if the stock market continues going down, because it's outperforming it so well. It doesn't even matter. And I think that this horizontal right here, even though I'm not, like, I have this more for data so you can visualize stuff, but I aligned it with the top of the formation. This area right here. Okay? It might be this horizontal. That is that line where Bitcoin goes up regardless. And so let's dive in to see what's happened recently. This is a day. I want to go to the 4-hour chart. Can I still see everything on the 4? Yeah, so this is a 4-hour chart. You can still see it all. 60-day uptrend as stock market just melted after a big-ass bear market rally. A really big one. Bitcoin stays strong going sideways. The trend right here, something changed right here because the trend became actually a confirmed downtrend. High. Well, actually, this is a lower high. It actually started right here. So on this candle right there, confirmed this as a downtrend. So you have a high, higher low. So higher high, higher low. Higher high, lower low. At this point, it became a no trend, which isn't a death sentence, but it was a no trend. Because to have a trend, you have to have both. You either have to have lower low and lower high, or you have to have higher high and higher low simultaneously at all times. And when you only have one of two, it is a no trend. On this candle right here, so let me zoom into this part. This candle here confirmed that this was a local high, which means that it's a lower high to this one, which confirmed a daily downtrend. Even though I'm on the 4-hour chart, but I just you can see more information here. And the trend reversed. However, it found support on this trend line. So for some reason, this works like a normal chart. As weird as it sounds, it does, right? And not only did it do this, but it's getting above a line that this line right here, I think would be harder to get over than this line. So because this big resistance has been taken out, and rather look at the velocity. It didn't even look at this. Oop, I don't want to move that. There we go. It only stutter stepped in there for 11 hours. And it was among the most bullish formations possible at a major resistance. Like, you literally can't consolidate at a resistance in a fashion more bullish than that. You can't. Well, yeah, I guess there is. Yeah, I guess you could. You could go past it, land on it, and use it as support. But I guess I did say you can't consolidate under resistance. So under that specific way I said it, you cannot consolidate under a resistance in any way more bullish than this. You cannot. And so it got above a very difficult horizontal rather easily. And this next horizontal is going to be easier to pass. Are we following my logic so far? But after this horizontal, what's next? The top horizontal. Does it have a long way to go? Sure, it does. It's not quite there yet. But breaking it down like this threshold that just happened, getting past here, that is a macro, I wouldn't say a change, but that is significant threshold to pass on a macro scale. It did not flip the chances better than 50% that the bottom's in, but it took it from like 1 in 5 chances to 1 in 3, I think, because it's going to be easier to get over this one. And then the last one you have to get over is the final frontier. When I think at that level, once the highest one gets passed, I think that the probabilities then are clearly in favor that the bottom's in. Does it guarantee it? No, absolutely not. There are no guarantees. But I would say that the bottom's likely in at that point if it gets above it. Okay. Now, the exact moment it does get above it, obviously I'll be looking for a failure pattern. So I wouldn't say it's super probable until it's used as support and gets over its punch high, right? Getting above it. But still, in general, once it shows that this is support, I mean, the bottom is very, very, very likely in. And this is a massive, massive threshold to have crossed. Therefore, it's extremely significant on a macro scale. And those are your 3 things that have happened that are super significant in Bitcoin price, even though price is being super boring, still going sideways, boring everybody to death. And hopefully you found this information useful. I'm going to move on to all right. Ethereum right now is toying with the levels that I spelled out last video before the levels were hit. So let's go take a look at what price is doing around them. And then in this Ethereum video, I'm going to show you why those lines are there, when price interacting with them becomes significant, in addition to how I would strongly anticipate price will look like as you see the candles. How will it very likely behave around there, so that when the trigger for something significant to happen happens, you've already seen roughly how price will move and you feel more comfortable like, hey, this is a signal. And so let's go dive in. And I think I'm the only crypto YouTuber who breaks it down like that. Show you the exact way price is going to move around it and what it means. All right, so I don't know if that's a fact, but I'm definitely one of the only ones who does it regularly. Okay, so last time, I think it's 2 Ethereum videos ago, I put this triangle here. This yellow line has been here for months. My last video, I created this. This is technically one rectangle, right? It's a rotated rectangle. But it's 2 lines, 1, 2, and this horizontal. These are the lines that I set on my last video when price was right here. I think the price was about here, or actually touching the triangle, okay? And I set these lines here saying, hey, price is probably going to interact with these now. And in that last video, I mentioned, there was another line from that video. I'm missing one. I had one here as well. Right there. I connected these 2 dots. Yep. So when I made that line, it was not because of this point, because I did it before that. It was here and here. So actually, yeah, this is the other line. I don't know why I deleted it. I should have saved it. Okay. So in that video, I mentioned, hey, I still think that as long as Bitcoin stays over the magic line in the sand, which it's not above anymore. Okay. So from my Bitcoin portion of this video, it's not above it anymore. So what I said during that time was specific to if Bitcoin could stay above the magic line in the sand, and that's been dealt with and it's below it. But at the time I mentioned, if Bitcoin could stay above that line in the sand, this is very, very likely going to be hit. And if you're trying to trade this, first, you need to look at Bitcoin to make sure it's still above that line because that it would take this out of play or take it out of probability. It wouldn't be over 51% likely. So at that moment when Bitcoin was over, I said, hey, my first entry to try to, trade along up to there would be this obvious line that everybody's going to be looking at. So had one done that, you could have entered, and it moved enough to put your stop in profit easily. Yeah, that's 4%. Your stop. If you're in a trade in raw price, not your ROI, but the raw price has gone up 4% and you don't have a stop in profit, you're doing it wrong. Very wrong. And I think that's for all trading styles. There might be some exceptions, such as price moved, on a 1 minute candle at 4%, and I haven't had time. Okay, well, outside of that, but a slow regular movement up that happened over days, you're doing it wrong. And then you would have been stopped out in profit, wouldn't have made much money. I made this line when price was back here. I said, if that doesn't work, my second attempt would be this line. Once again, if you entered there, you had plenty of time to put stop in profit. You made money twice. You were wrong twice, but you were paid to be wrong. So far, these levels are getting hit it's almost as if Ethereum is watching my videos like it had its own brain. Okay, and then it came up and got rejected from the same line it bounced off of. So that's pretty bearish. And during its strong down move, it hit almost exactly on the horizontal that I mentioned, hey, even if Bitcoin, I think what I said was, I said two things about this horizontal. I said, once it goes below here, I would no longer be looking for longs. And if I were trying to be long after Ethereum went down here, doesn't matter closure or whatever, just goes below, I would be looking for lower highs to its local high here, which is at, and I would take off the table 1720 if it went below there, okay? And so that is a follow-up on how price has interacted with those levels. I think I picked pretty good levels. Like that's not gonna lie, that was pretty solid stuff. And there were points where you were paid to be wrong. So not bad. Being in profit when you're wrong is badass. It's really good. Okay. What can I say now? Bitcoin has gone below its line in the sand. Therefore, I think 1720 is out of the question. Or it's not out of the question. I'm so sorry. That's definitely the wrong thing to say. It is not probable. When does it become more probable? Well, Bitcoin is going to have to, and the stock market are going to have to start doing something significant. I think when Ethereum becomes more probable to the upside, I think Bitcoin has to get above. I think it has to get above that point and that point, first off, before Ethereum has a probable, no matter what Ethereum price is doing, Bitcoin within reason. So if Ethereum starts way outperforming Bitcoin, okay, well, that would be an exception, but I don't think that's getting ready to happen. If Bitcoin is not above here, then I think you're on lower high watch for Ethereum. And again, I think Bitcoin getting above here is improbable because it's already past my line in the sand. But if it does happen, this would be my trigger where I would say to myself, hey, Posas or Tim just said this shit's improbable, but when does it become probable again? Right there. Even though this is Bitcoin, I'm talking about Ethereum. That's when, so probabilities can go back and forth. It's like a liquid. It's fluid, right? It can change. So this is when it changes it once again for Ethereum. But until Bitcoin's over here, any move up on Ethereum, with exception of the Ethereum versus Bitcoin chart, just goes parabolic. With that exception, you're on lower high watch for Ethereum because it's not probable 1720 is going to be hit. How price will move. So under the conditions that Bitcoin does not get back above that level, I would say the way price could move for Ethereum is it could easily find a lower high at the first line that I mentioned, way up here. So if a rally does ensue of some form, like an 8%, or whatever would that be? Yeah, a 6% rally. Ethereum hitting its head on here is a very high likelihood because you're on lower high watch, period. And that's a perfect area for sellers to step in. Previous support, hit it again, it's obvious resistance. Sellers will step in there. Will it reverse it? That's the question. But sellers will step in there. But that would be my favorite point. And in order for Ethereum to get above that and use it as support once again, I don't think that can happen without Bitcoin being above the point I just mentioned, which was 20,630 or something. So Ethereum getting above this would coincide with Bitcoin getting above 20,600 and change, right? And the way you could see that is, so with these other lines, and again, I suggest you go back on this video where I was zoomed out and try to like emulate these lines, draw them on your chart. Ethereum can easily come down here, not go below my bear line, and then come all the way back up, do a, something to the effect of a failure pattern. Here, let me do it like this. So even if it comes way down here, it could still get back above that line and hit this eventually. And the way you'd see that happen is because that would essentially form an inverse head and shoulders, which is a very common pivot formation, I guess, for lows back to high. It's likely going to fill out. It would go. Let me redraw that. Actually, the way that, so if it does come down here and bounce, it would then go like this. It would be aggressive off the first bounce. It would go like this, work its way up, and then it would probably consolidate here, looking very, very bullish for a breakout. And then it would come down to either this point or this point to get symmetry, because these formations love symmetry and they almost always complete it. And there are only two options. Just look at all, no matter the time frame. And I would suggest 5-minute candles or 1-minute candles to see these, so you can see a bunch. Just scroll past your chart, look for it. It almost always hits. There are only two options on the left-hand side, and you can see them. Sometimes this one's up higher, and this one's down lower, but you have two that are like this. It'll come down and check one, and then it'll go up and come hit this. That is by far the most likely way that I think that would happen. And it would be kind of tricky if you're not expecting that. I wouldn't expect that to be the most likely case until, it actually bounces from here. Because honestly, it could start consolidating over here, lower high, lower low, and just roll over. So with that analysis, I'm not saying expect a bounce here, even though I would expect it to be one of the two best, most likely options. But rather, if it is going to touch this line again, what would it look like? I think it's got to pull back, do that shape, and that's likely how it would move. But this is also another good candidate with the stock market getting really bearish here. And these levels for Ethereum, shame on me. I took my levels off. So sorry. That is so you can get this stuff exactly. This is essentially the most important line there. All right. And where these wicks are, this is October 28th. And this down here is October 25th. So you can create this line. And then to create the rotated rectangle, I'll zoom out. You'll need to go to a 2-hour chart or bigger. I don't know, maybe the 1-hour chart. Yeah, you'll want it on the 2-hour or 4-hour chart. And you're going to look back to Ethereum's lows for this year when it went down in the 800s. And you connect. So, but it's a rotated rectangle, or it's not just one trend line, because look at how this happens. Look, this is why If you're okay, what I'm about to show you applies to anybody, like not just Ethereum fans or whatever. This is cool what I'm about to show you, and you've probably never seen it anywhere else. This significant wick hits the bottom, this significant wick hits the top. Therefore, I don't want one line or a best fit line, I want both. And I want to know that it goes together, therefore I do the rotated rectangle. Does that make sense? And that's how you can make it. And so the first low I just told you, it's the yearly low, and the second one is when price hit $1,000 on the head, right in July 12th. And with those lines, if you draw them on your Ethereum chart, they're going to keep you safe. I literally just proved it to you, and like that is the lines. That's what people are looking at, and that's what you want to be using for now until that horizontal is broken below. And hopefully you found that helpful. XRP. I keep telling myself I'm going to keep these under 5 minutes, but then I just get so excited talking about price. Okay, XRP. I actually haven't looked at XRP. Ugh, that's not good. XRP is proving once again that one of the cons to using shapes for trading ideas is that you often have to adjust your lines. And what you thought was a breakout actually isn't, or a breakdown actually wasn't. And in hindsight, you say, oh, I should have had my lines here. And let me show you what I mean on XRP price, so I can show you what I think is in play now. And again, I fell victim to that, right? I had this triangle, and actually, I'm getting ready to adjust it. I'm going to show you why, and how I would interpret more significant levels for. We're going to give very well defined price level. You know exactly what price it's at, why it's important, and then how price will behave. And then the fourth final thing is. How price will move when a threshold is triggered with those lines. So let's go get some XRP. The triangle bottom originally was from an origin line. And this is going back to 2015 and all that stuff, right? So this is the origin of price, all of price history. And it was playing with among the most important origin lines in all. Honestly, it might be the second or third most important straight line in all of XRP price history. I think it might be the second most important. Right here. Even though it doesn't have much touch, price doesn't interact with it much afterward, but this is such a big pivot that I think it puts it as number 2 or number 3 most important straight lines that you could ever have for all of XRP, okay? And we're going to zoom in here and take a quick look. Let's now go to the 1 hour chart. Nope, I'm going to go to the 4 hour chart. Yes. So originally, that line, since it's such a big deal, it was a really big deal that, first off, XRP fell below it. Failure pattern, rejection, failure, rejection. It was really riding this line. And again, I've had this line here for like over a year, right? They work. And it's not a coincidence that on this large drop down that it hesitated here and it began accelerating again exactly at the origin line. Or it's not a coincidence because I had my origin line there before it happened. Or it's not a coincidence that the big down move happened for when it was at 70 cents exactly at my origin line, right? After having tested the origin line perfectly multiple times. Make the line more obvious, just for new viewers. I'm sorry, returning viewers, you already know these work, but just so you can see. Okay, this is significant shit. All right, that's why I drew this triangle there, because it really looked like that's what was going to get it. Right now, though, I think what is happening is, with this triangle, this wick right here, which essentially begins the consolidation, which is roughly 140 days long. 170. Wow, it's been consolidating longer than Bitcoin. Okay. This wick right here from May of this year, and which other one? I would say, let's see here. It's not this one. It's probably this one right here. Yeah, this wick. These are going to be your bottom base. So these are going to be kind of like your, which one is it? What did I pick? Yeah, I think that one right there. So instead of the bottom falling out where price accelerates, I mean, honestly, it could end up being this, like it might just fall off a cliff, but it looks like we need to redraw the triangle. So I'm going to put a horizontal there and there. Okay, yeah, and so, yeah, zooming in, that is what price was dealing with. Yes, sir. Those are the right ones. Okay, perfect. So I'm going to redraw the triangle to this. It is now a descending triangle, which doesn't fully mature until the middle of November. And the interesting thing about it being drawn that way is that it will break back above both the trend, the triangle for a breakout and the origin line simultaneously. So the original triangle, the way I had it, it looks like it's done. It already fell out once, got back in, fell back out, hit its head, went even lower, and now it's done. It's not going back in the triangle. But this way, I don't think there's a necessarily information in here that makes one way obvious whether it's going to break out or break down, but it's new information. If there is a breakout, then you have an extra reason why it could be powerful. And I think my last XRP video, I was already explaining why it could be a very powerful breakout. So drawing it this way, it's not a death sentence yet. It's not good. What's happening right now isn't bullish. Falling below an origin line is never bullish. Like, it's not. It is pretty bearish, but there is hope. It's not said and done yet, okay? However, the probabilities are in favor of downside, right? Okay. So this line here is something that you're going to want, especially this bottom one, 40, maybe just call it 42. Yeah, 42 cents is going to be a big ass deal. And other people are probably looking at that because that's the wicks right here. Okay. Now, I had to establish all that first so that we know what's in play and where price will have its bumpers, its pinball bumpers. Where will it pivot? Where will it, start doing something interesting? I had to readjust these so we have essentially different lines here. Okay. And I think which EMAs are in play. The weekly 10 is in play. And that's the most major one. Okay, so you need the triangle, the horizontal, and do your best to draw this origin line on here. You don't have to go all the way back in time. But honestly, if you could, it's obvious. Like, just go to the daily chart and draw, price from this wick down to that big pivot, back in 2016 or whatever. So, in general rules, so we have the origin line, the triangle, and the horizontal, and the weekly 10. We have 4 things on our chart. These are the things that I think you need on your chart to get a good understanding of where price will go next. Or, perhaps even more importantly, when you don't have an edge, and maybe you shouldn't be trying to trade it, which is very valuable. And I still have people making comments who don't understand that. I just had one yesterday about price could go up, could go down. Like, no, it's more valuable than what you think. It just means you shouldn't be clicking around with your money. Wait until you get a threshold crossed. Wait until you have a setup. You're a wrestler or something. Like, you go for setups. You don't just charge somebody and try to tackle them. You don't see wrestlers do that unless it's the WWE or whatever. Wait for a setup. You You wait, right? Okay, that's what that means. Anyway, diving in here, as long as XRP is above its weekly 10, it does have a pretty freaking good chance to get above here, break out. It honestly does. I don't think it's probable, mostly because I think this origin line trumps it. Origin lines are more macro than anything else, even more so than the weekly 10 EMA, which is by far, in my opinion, the strongest, most powerful single indicator on a single time frame that there is. But I think this trumps it. Therefore, because of that battle of support and resistance, I think the probabilities are slightly in favor to the downside. They're not heavily in favor to the downside because this could end up winning. This is almost like a close fight, right? Does that make sense? Two people, you're kind of put your bets on one person, but you're not so sure. That's what's happening. And the fight is between this line as resistance, so sellers stepping in, bears defending this, and bulls defending this. And I think the resolution of this will involve these lines, which means it's possible, if it happens soon, that it could just hit both and wick above here. But in general, that's what's happening right now. And I think the probabilities are slightly to the downside, but not by much. Once price goes below the weekly 10, it's extremely likely to head straight to the bottom to that 42 cent mark. It should go straight there within a day. That is a trigger, a threshold. It won't necessarily create a lot of sell pressure, but it will rid of a lot of buy pressure. So if the sell pressure remains the same at that threshold as price goes below here, doesn't change. The flow of water of sellers stays the same, but you turn off the faucet a little bit on the buyers, price will go down, right? That's what will very likely happen. You could get a bounce from there, but at that point, it's way less probable for price to get back above here. Does that make sense? So the weekly 10 is kind of my line in the sand where the probabilities really get in favor of downside movement. Not all in one move down. It'll probably come up, come back to the top of here, which by that time the weekly 10 will be over there, right? And then it'll probably touch this one more time before then dropping out. But the probabilities at that exact moment would be highly in favor of the bears. I would not get bullish for anything more than, that's still a 13% move. But from the bottom of this, in about a week or so to the origin line, it's a 13% move, which is extraordinarily tradable. But if you try going long off there, I would still be on general lower high watch because I don't think it would have not a great chance of getting above that line. Should it both go below the weekly 10, this red thing here that you can barely see because of the black triangle, and it hits this, it'd very likely get rejected from there, fall back in the triangle, and then go down. Make sense? So that's the way price would likely move to the downside. Goes under the weekly 10, goes straight to 42 cents, back up to roughly this level, and then it would probably start trickling down from there. Or it could get more bullish and break out of this upper trend line. But if that does, I still think it's more probable this trend line will beat it down. And those are all the ways that I could see price moving outside of the other option of, like the really big move down. I'm not going to cover that quite yet. As price gets closer to here, I'll cover that. But in the meantime, it's way more probable that everything I just covered is likely what's going to happen over the next 10 days or until next Tuesday when I cover XRP again. So all this information has a great chance of keeping you safe and keeping you understanding where your probabilities lie, where your thresholds lie, and your bumpers, your price bumpers until next Tuesday at least. That's XRP. I'm forgetting one. Doge. Last time I covered Dogecoin, I drew these three lines that you can see behind me on here. They each represented something different price right now is exactly at the top one. So I covered Doge when it was about here. Talked about this line for a breakout target, which isn't much higher than current price. It's an origin line. It's the most macro you can get. Drew this line and this line. And the significance of these lines, I'm getting ready to rehash them first. So what I'll do in this video is I'll tell you why these are important, what my thought process was, and then now that price is touching them, I'll go back over the way price was likely going to move, and I'll give you the top 2 ways and the specific price paths, and you can anticipate literally how price will move around these lines. And in hindsight, in the next week or two, you can look back on this video, and one of the ways I draw price moving, it has a very strong chance of being accurate because I'm going to do about 4 different price paths. Among those 4, one will probably get it. So here we go. Dogecoin. So you can see how I drew this first one. Let's take off all of this. This is how I drew the first one. And don't worry about the origin lines. So these, right, this is origin line, blue one's the master origin line, I think. Origin line. Okay, so we're not looking at that. We're looking at this guy right here. So zoomed out of essentially all of Dogecoin price. That's what we're dealing with, okay? That segment. So to be on a 4-hour chart might be, 4-hour chart would probably do it. Maybe even the 1-hour chart. Let's try the 1 hour. Nope. 2-hour, 4 hour is going to be better. So I'm picking the 2-hour chart. My idea behind drawing these lines as being the obvious bumpers, where price will go to and be attracted to and have a high chance of pivoting, right? Doing something totally different than what it was doing the previous 10 candles of that time for a small time frame. Price from June all the way to August. So for roughly a month and 10 days, about 95% of trading volume was specifically on these lines. It created a trading channel before it broke out, right? And just like how previous support, once you break below it, it becomes future resistance. The same idea happens. So just imagine that thought, and now that trading channel is kind of like a horizontal or a resistance or a support. We're going to treat it mentally the same, and that's why I drew these here. And I anticipated strongly that they would be where price would want to go and pivot, create pivots. All right, so now we're going to zoom into here to the first one. My idea behind the first one there's a third line here. Okay, so to Dogecoin's journey up to here, I was making the price analysis roughly here before this line was hit. I mentioned that if it were to hit this, and price was right here when I made the video, my idea with these lines was, I think it at least has to hit this trend line to come back up here. It did hit it, and it went down. But the idea was, it needs to pull back at least to this level before buyers will step in to come up here, okay? And you can see that this was a clear pivot point. So go down to the 3-minute chart. Price really dealt with this and it accelerated down right when buyers stopped defending it. Okay, because everybody was looking at it who was trading Doge, which is mostly retail traders. And once it was broken, then the sell buyers just stopped buying for a bit, right? Until you had another pivot point where buyers would step in, which was here. So let's zoom into that point. This line I labeled as another likely area where Doge would pull back to before it would then go up to that bullish target. So zooming in on the 3-minute chart, we can see that line is what the bulls are defending. It's a clear pivot point, right, for it. Okay, the next line down that I've drawn, is this an origin line next to it? It is an origin line. Okay, this next line down is the halfway point between here and here from that previous trading channel. I mentioned if I were to try to trade long up to here, I would probably try it here with stops with the idea that it could easily hit this line down here. So set stops and expect to have to try it twice. I would try this line too for a long to try to trade it up to here because it's still pretty bullish, honestly. Not on this time frame, but on the daily it is. So had you tried this first one, you would have entered. Would you have been able to get your stops in profit? On an 8% move, you better. So the first idea, profitable. You were wrong, but paid to be wrong. Second area, I must have accidentally moved this. This was touching that exactly. Oh. Why? All right, let me move it back, actually. There we go. On the second one, where I said I would try for a second attempt, could you have gotten your, honestly, that was pretty exact. On 11% move, honestly, your profit target probably was already hit. But you would have been paid to be wrong because your stop was in profit. The idea behind this line down here is that it's probably going to bounce there, but this would be my last attempt to try to trade up to that area, because after this, that's when it becomes probable that the current local high is the high and the next move up will be a lower high. So on lower highs, they can be aggressive. You could technically still trade up, but I wouldn't be looking to trade up all the way to that previous target if this is crossed. I would still attempt it here. So first attempt, second attempt, got paid to be wrong both times. Third attempt, but after this, if it touched this line, I would not. Like maybe I'd go for a counter trend trade, but I would not try to take it all the way back up there for a big trade. Does that make sense? All right, now what we can expect of price is, first off, I would go back, if you're a Doge fan and you're trading this, I would try to emulate what I have on my chart, because beyond a reasonable doubt, I just showed you that these are the lines to look at, right? Besides this one. The interesting thing about this is it has an origin line right next to it. So I'm honestly not so sure that this blue line is going to work out. I think it's going to actually go to the origin. This orange guy down here. Because they're so close. I think the origin line is going to trump the middle of the range. But anyway, I'm going to keep it on there because I want to see in hindsight how it plays with both, since they're so close. Watch price go to it and get stuck between it and just go sideways for 3 days like this. That'd be weird. All right. That would be undeniable proof that these were the bumpers. But anyway, I don't think that'll happen. Price could easily accelerate down here without dipping, failure, rejection, then coming down. Just heads up, the way that this is working out is this could invite a lot of sellers, and it could move aggressively down here without proving this to be resistance. Does that make sense? So typically when I see something fall off a cliff, by far the most likely way that it happens with especially Bitcoin and things that follow Bitcoin is it dips below, comes back up, either does a failure pattern or a rejection, or sometimes both, just like I drew, and then doesn't accelerate to the downside until it takes out what I call the punch low, which is the first low it makes as it kind of flies through. And that's when it accelerates, and it would go straight to this line, to the middle line for how big of a move from the acceleration point. It would be a 10% move straight down. I still think that is among the two most likely ways that price will move if it were to go down. But I think that because Dogecoin is heavily traded by retail traders and not sophisticated bots so much, that it's more mass market psychology, and it might be a 50-50 chance with the idea that in hindsight it's already hit this. How did it get there? I think it might go below this and not touch it as resistance. So it might do something like this and not do that, the most common way. All right, so those are the two ways I could see price making that, pretty big move down to this target right here. It's between 10.8 and 10.6, okay? But this area is going to be a pivot point. And honestly, Dogecoin could go down there and still be in a bullish, larger, I think a daily trend would still be up. Yeah, the daily trend would still be strong. Easily. See that? Hell, the daily trend could come all the way back down to here and still be in an uptrend, technically. But this would be my line in the sand that it's going to be on lower high watch, which means it's a probability that this was the top and my target won't be hit. Am I making sense here? Okay. So let's go back to the small time frames. If it's going to bounce from here, then the previous support will, even if it were to act as resistance, which it probably would if it were lower, it will already be above the area of profit taking the target anyway. So this comes out of play. So if it can bounce here, I think it actually has a strong chance of hitting that target still. So as of right now, I would, man, if the stock market weren't as bearish as it is, I would say it's extremely probable. I would say 70% that this is going to be hit. But because the stock market is so nasty, I think it might be still close. It might be closer to 50-50, just a little bit better than 50-50. But the chances of this still being hit are pretty high. Right? I would stop trying to trade up there when this hits. So, and if it were to bounce here, I think your acceleration, where it really, really starts accelerating, is going to be at when it crosses that wick, a box between that wick and this wick. It could race right up and do one of those aggressive moves. So your pivot point for where buyers will be attracted to really get in and jump in and price and really start screaming is in that area right here. And until that point, just, make sure you get your stops and profit. If you're trying to, if you trade long off here and it does bounce, just realize that's where it could break down. But if it could get above there, that's also where you're just home free up to that target. It should go up there pretty fast, within 2 or 3 days, perhaps within hours. And I think that covers up, down, sideways, how it'll break down. If it breaks down, the 2 best ways. If it breaks up, the 2 most likely ways. I think that should keep you safe with Dogecoin and all these levels for probably the next week. Hopefully it was helpful. Girls breaking into my office, screaming. Not in a bad way this time. And I'm not creating a miniature flood at my duck pond by leaving my water spigot on, my hose. All right. Here we go. Questions time. Uh-oh. What did I just do? Here we go. Hey, Tim. Kadena and Flux, please. Okay. Hello, Tim. After FOMC. Yeah, I'll get to that. Kadena, I'll do it here in a second. Thurman SH says, hello, Tim. After FOMC, can we reevaluate whether the bottom is in and when it should happen, specific levels to watch? Yeah, so you asked that question before I started, I think, and that's pretty much what I covered in the Bitcoin portion. So I think I answered that question. I apologize if you feel that the content thus far hasn't answered it, but I'm pretty sure the Bitcoin portion did address that very specifically without even knowing you had asked it. Do you see continuation downwards from now on that we reach the 20,200 level beyond Wednesday? Okay, so that question I did also address. Yes, I see continuation downwards because of that. Yes. Very, very strong probabilities, especially with poor closures in the stock market, plus Bitcoin closed below there. The only thing holding me back of thinking like this is definitely going down is, wow, Doge is starting to go way down. It is going to accelerate right there. Or it might be still be making a punch low. But anyway, is that Bitcoin versus the stock market chart. That is making it not so crazy probable that Bitcoin will really get continuation down. What's up? All right. So yes, I do think so. And then, let's see here. Do you think we'll dump around the election? I don't know. I don't have strong opinions on that. I think there's a heightened probability of a dump occurring on that time axis, because in a bear market that's been going sideways and trying to rally in a bear market, it's price of anything in that condition, Bitcoin, stock market, all that stuff, Apple, well, maybe besides Apple, well, even Apple at this point, but the way price continues down before you can tell it's going to leg down hard. But the way I would describe price in that moment where it's about ready to happen, but it hasn't happened, you don't know, is its price is similar to a person with a weakened immune system. You can be super healthy, but even the most common pathogen, like the cold virus, the common cold virus, could take you out. You just need a single stimulus, and it could really make you move. And that's the way, that is the status of the whole, I mean, all of traditional finance, all of Nasdaq, all of S&P. And the election is kind of like a pathogen. Since we're in a bear market, the stock market and Bitcoin and all of crypto is the human with a weakened immune system. And so the pathogen is getting closer and closer and closer and closer. And it's going to go in Bitcoin's mouth. Will it make it sick and make it go down? I don't know, but it does definitely increase the chance. So I would say it's a good guess, but I, specific to that, I personally don't have opinions. DCF is asking, do you think we can get a similar run up like we did from the local 2018 bottom through 2019 and then crash back down? Yeah, that mini market cycle. I used to think that that was one of my 3 or 4 favorite macro price paths. But because something new is happening in the context of Bitcoin's 13-year price history, with the stock market having its first ever bear market during Bitcoin's existence, I think the chances of that happening are low. In other words, more likely to do a more traditional one, leg down more than, go sideways, find a bottom, then race off after like a year-long U shape or something, without doing the spike up all the way back down. But leg down more, a more traditional type of bottom formation, more like 2015, 2016, or the idea that if Bitcoin can continue increasing versus the stock market, if you start seeing something like that soon, I think it would cross a Bitcoin threshold of no return to a bullish sense, that Bitcoin would probably go straight to 100K. I don't think it would stop at the equivalent of a massive rally going from 3,200 to 14K like it did in early 2019 through mid 2019. Because if that were to happen at the exact point where it'd be the equivalent top of that previous move at 14K, Bitcoin now, because of the bear market of the stock market, it will have crossed a threshold that did not exist in 2019, and Bitcoin would continue going up. Because what that would entail most likely is A, the stock market has reversed and Bitcoin's just going to get into a bull market and it's going to keep going. Or B, the stock market has not reversed. It's either bottoming out or still going down. But money trying to escape the stock market, they're going to have an obvious place to go with a strong and aggressive uptrend. And it will have a compounding effect, and it could create a parabolic move that is sustained for quite a while. That would be an awesome scenario. I don't want it to happen quite yet. But But that is, I would say, among all, my major thoughts on macro, that's probably number 3 or 4 for me. Especially now that special chart I went over, it's getting kind of high. I think it's number 3 or 4 on my list now. So yeah, I it's possible, but because the context is different, I think it's less likely for those reasons. Okay. KDA and Flux. All right, I'm gonna have to do these really fast because my wife told her I wouldn't be done until 7:30, but she came in at 7. Said, "You said 7." I was like, "She wants to go somewhere with me." I was like, "No, I said 7:30." All right. We're gonna do KDA quickly. I've been covering this quite a bit, and my lines have held up rather well, so I don't have to draw a bunch of stuff on here. I already have it set, so let's go check out KDA price and what's new with it. Still in my black triangle. Again, for new viewers, I anticipated that price would form a triangle exactly here before it dropped into here. So there's honestly the last video that I made. Actually, I really shouldn't even record this. It's the same thing. There is no new analysis on this. You have 2 points of interest that will create a breakdown or breakout. You have an origin line and you have a horizontal. A break to the upside, if Bitcoin gets bullish, it's easier to trade that because you have nothing super immediate after this breakout point to beat it down to invite sellers. But to the downside, you do have an immediate point out of this shape. You have an area that will invite buyers, and it will complicate your trade a little bit because it can juke around here and then get tricky and then go. And, you're somebody who wants it now, and you don't expect it to take 7 days to finally, that's 15 days. And so my last analysis kind of went over all of that. A breakout to the downside, I would be very aware of this level here, and I would expect a bounce. Therefore, if you're trying to trade short, not financial. If I were trying to trade short, I took a trade, short trade in here. I would at least take half profits and move my stop to better than break even. Looking to re-enter as a rejection on this origin line, and then do it again. So that, but to the upside, if it were to break out, because Bitcoin, starts going above 20,600. I would probably try holding a breakout a little longer than that for all these reasons, and that is Kadena. Flux, how much has changed? Okay, it's still, so this is also still the same from last time as well. This is inverse. Remember the complication on Kadena was down low? Same thing applies, but to the upside. For Flux, you have immediate strong resistance that will invite sellers. And so if you're trying to trade to the upside, profit taking and babying stops would need to happen fairly quickly, because this could get a reversal and it falls right back on its face. To the downside, I personally, and eventually I think it would probably take a while to get there, but I think it would go almost straight to this next origin line. And it would probably happen almost exactly at this time because of this horizontal. So the only way to time the market, or to attempt to time the market, is using the area where 2 very important lines cross. And so if this target is hit, it'll probably happen right there. And that is November 29th. You can't time the market, but if you're ever going to try, it's usually 2 very important things are crossing. It sucks price into it at the exact rate it needs to get there at that time. And so if I were to trade down, honestly, you know what? If this were to break out, I would continue. I would just trade a downtrend. I would look to take quicker profits and re-enter at lower highs, lower highs, lower highs, lower highs, because I would have full confidence it would eventually make it there. I don't think I would just try to trade it the whole way down. I would probably just try to take profit and keep re-entering, and take my money back from the market and keep it safe. And that is Flux. Ottoman, I'm just now seeing that super chat. Thank you again. Ottoman is one of my, I guess, tenured VIPs on Discord. Evmos. Okay, so just looking at the exchanges, well, never mind. I'm not even going to say that. What I was going to say, given the exchanges it's on, I can already tell it's a micro cap, probably under 15 million market cap. And usually, if those coins come out in a bear market, it has a heightened chance of never coming back. And by the time the next bull market's here, the team's already left. They have no Twitter activity. But I stopped myself because this chart actually doesn't look bad. Perhaps mostly because it's fairly new, but still, it doesn't look bad. So, but keep aware of that. Small caps, I mean, if you're interested from an investment standpoint, which it sounds like you are because you asked for lows, just small caps are just, I don't know. They're not a safe bet. They're very, very, very risky bets. But I can already see what this is, I think, where the main lines would be. So I would make a rotated rectangle from wick high to roughly wick low. Maybe like that. Yep. There you go. And then maybe make a line in the middle of it. Good measure. Like a point of control type of deal. Okay, and then a bottom target, I have to add vertical lines for a guess of when, right? And then it's just, where does the line cross this thing? And that would be my price guess. Why is this not showing me more data? Oh. Well, let's say the bottom is in December, which it might be later. If that were it, and this were to really leg down, I would say price has a strong chance of being between 12 and 26 cents. It has broken out of this, and it's maintaining an uptrend. So this coin has a decent chance of doing better than this. I'm not going to lie. It looks like since month and 4 days ago, that this is not trading interest. Like, people are actually buying this from an investment standpoint. So this strategy of guessing bottom, because of how strong this is on the daily over here in a bear market, and this is outperforming Bitcoin by a mile, I think that this has the chances of these being right are a little lower than normal. Do they still have a good chance of being hit? Yeah, but not until this low is taken out. Once this low is taken out, then those become pretty damn probable targets. So that point right here is the daily closing candle of the previous daily high. That's $1.43. So on this chart, if you like this coin, you need a horizontal there, period. That is probably the most important line on this entire chart, specific to trying to figure out how to get into this during a bear market and at what points. Because it confirms a daily downtrend once it goes below. Thurman asks, what's the trigger that should indicate that the bottom is not in? I mean, the moment it goes below 17.5, that would be my answer. or the lack of other triggers. I see what you're saying, though. I don't know if there is an answer. But technically, the answer is the moment it passes 17.5. But to not be a smartass, I think the way I'd answer that is, and I think I have to go after this. I don't want to drive in a car with an angry and probably hungry Mexican woman. Hungry women are just very dangerous animals. Dangerous creatures. Very dangerous. All right. Anyway, I wouldn't view it that way. I would view it as the color spectrum. You know, the Roy G. Biv, so G in the middle. Okay? And I would say, you know, and you know how the green shade, it starts like turning teal over here, and here it's like a yellow green or something before it hits yellow, right? I would view it more on shades. And the shades, what they mean are the probabilities of the bottom being in. I don't know if it's going to be a trigger of not being in. I think you're constantly in a state of flux that, hey, at this point, we're on yellow-green. The bottom's probably not in. But even when you cross the threshold, you know, that trigger of halfway on the gamut, where it becomes more probable the bottom's in, it's still not definite. Like, I don't know if it is a trigger. I think it's a game of probabilities, and it's more of a personal question. When do I have my threshold at the bottom's in? But in reality, I don't know if that threshold exists until it passes 69K. Technically. But it's a U threshold. When are you just forgetting about, you know, I am done thinking about lower lows? That's up to you. So I don't think there exists one. Mine personally. So final answer. My favorite way to answer that interesting question is if the weekly 10 has not crossed above the weekly 21, then the bottom's not in. Simple as that. I probably should have started with that. I'm sorry. That's it. And on a chart, if you want to see it before I go. Red goes above yellow. That's it. Red, yeah. So, but it's not a good bottom signal, right? But I just think that, you know, in a bear market, the bottom probably isn't in until this is crossed. And after this crosses, any strong move down will be a higher low. And that's it. And that's also my threshold of when, you know, I'm trading long or I'm investing. I'm doing more of an investor type of scenario for trade, like being up and bullish. And that's my answer. Yeah, I didn't talk about quant. Oh goodness, my wife is gonna. Are you? Ooh. I mean, it's mid-macro still kind of bullish. So the reason I drew this trend line here is because it aligns with the weekly 10. So continuing going up is still probable, in my opinion, without considering Bitcoin price. So can Bitcoin price really tanking like destroy that? Yes, it could. But as long as Bitcoin isn't breaking below 18.2 roughly, and quant is above this, it still is more likely to continue charging up over time. And this is the threshold where it becomes more probable. If it goes below, then charges up, it will be a lower high and it's going to find resistance. And that is my line in the sand. That's a quick quant one because it's past the more immediate micro time frame bullish stuff, so it needs to hit the weekly 10 before it gets a big bounce. It needs to hit it. And it might come in form of hitting this, going sideways, waiting for the weekly 10, and then writing up this line. So what? Here, I will record this. All right. Quant has broken below our micro time frame bullish areas, which is this origin line here, which goes back to the beginning of price. It's broken below, but from a mid-macro standpoint, it's still, as long as Bitcoin's over 18.2 and Quant is over this trend line here, it goes back to June and over the weekly 10. So as long as it's over this area and Bitcoin's over 18.2, I think it's still slightly probable that it continues its general mid-macro uptrend. That's my line in the sand where I say to myself, hey, if it crosses those areas, the weekly 10 / this trend line, the next rally up, I would assume that it's more probable to be a lower high, find rejection, and then continue going down. It could be a big rally up, but it would be a lower high to what it just saw at like 200 or 230. It wouldn't go past there at that point. So this is my probability flip from a mid-macro standpoint. Can you trade down like a crazy bear like the whole way down? Absolutely, on lower time frames, but mid-term time frames, which could take the scale of like 3-4 weeks or 6 weeks. That's the time frame I'm talking on right now. So if you're somebody who uses the 5-minute chart to trade on leverage, well shit's bearish right now. And it's probably going straight towards the weekly 10. And if I had to give one price path, here it is. I'm gonna have to go to the smaller time frame. I think it will hit the weekly 10, but the way it's going to hit it is two forms. It's either going to hold this line here at about 152 and then use that to also interact with, see this weekly 10? This weekly 10 will move its way up and it'll satisfy that and then go up or try up again, right? But I think the weekly 10 is going to be hit. Like, you're not going to see a big move until that's touched. And it might only touch it for 1 minute, but I think it's going to be touched at this point. It's extremely, extremely probable that a strong trade up is not going to happen until the weekly 10 is hit. And I can't give you one number because tomorrow it'll be higher and the next day it'll be higher, which is why I think it could hit this line, wait for the weekly 10, and then go. Another way this could happen, if the stock market really gets bearish, it blasts through the weekly 10, hits this origin line. This is the second most likely thing I think is going to happen over the next month. Or, 4 weeks or so. About a month. It goes below the weekly 10, which means it still hits it, right? Either way, it's going to probably hit it. And then it gets trapped in yet another triangle, just like stuck in my triangle last time. It gets stuck here and then makes its decision on whether it's going to try up one more time or continue down. It'll do it somewhere at that pinnacle. And that price point here is it's the same horizontal, which I think it could actually start bouncing on and wait for the weekly 10. So either way, I think it will end up here. I mean, could you get a nice big bounce like up to here first and then hit? Yeah, sure. But I think it's extremely, extremely, extremely probable that this will be hit. And I would not be looking for a strong trade up to the upside until the weekly 10 is hit. And when it does happen, I just showed you what I think are the two most likely ways that price would move, like literally move in that situation, and that is quant. All right, I gotta go. Wish me luck. Wish me luck, and we'll see you next Tuesday at 6 p.m. New York time. I'm sorry I did not answer everybody's questions. I got more than halfway through. I apologize. And then we'll see you Tuesday.